What's up, everybody? Jared Johnson here, coming at you from Union Hedge Funds. Let's have a little look at what's going on this week, what to expect, where everything's headed, what we might be up against. This week, we got some big stuff out. It's definitely going to be a news-heavy week. It's jobs week, so we got all the employment numbers coming up. We'll just see how that plays out. Remember, for quite a while, the employment numbers were looked at as, hey, if we get bad enough employment numbers, the Fed is going to lower interest rates. Well, at this point, the Fed's like, geez, we don't know what we're going to do. They may not raise rates, but they might, hang around this area for a lot longer than anybody's expecting. So I don't know if we're slowly creeping past the bad news is good news kind of era of hoping that enough bad news will get the Fed to react to a move lower, or if we're just going to say, hey, bad news is bad news, and so it goes, or good news is also bad news. We're going to see. But let's have a little peek at some charts. I don't want to get too techie on you today, but I think there's a couple of things we need to look at as far as everything goes. So when we're talking employment news and so on, we've got the JOLTS news this week. That's going to be, that'll be one to watch. ADP, all the private jobs. And then on Friday, NFP, all the public jobs, all the average hourly earnings and so on. We got some stuff coming up. Have you guys heard, by the way, this news that fast food, the fast food industry is looking to see how, because of hourly pay and how it's getting so expensive to have people work at, McDonald's or whatever, they're going to now start routing your drive-through order to India and the Philippines and so on. So when you roll up to the drive-through and you say, hey, I'm going to need a number 2, they're going to be like, okay, what is a number 2? Well, let's see what we got here. But it's going to be shot off to India, to the Philippines. My only question on that, my only thought is, why are we routing orders to the Philippines or to India or to anywhere else? Why don't we just require people to order on an app, drive through, pick it up? Why wouldn't you just order on your phone? Does anybody not have a smartphone here? I don't know. We'll see. Anyway, that's what's coming up this week. It's going to be a big news week. What I want to talk about is just where I think we should watch. I do a lot of research. I do a lot of, how are... where is the market being most affected by what, right? And the what is a big question for us. Let's look at this chart here, knowing that we have employment numbers. Now, this whole, where's the economy going? How's everything going? Employment numbers are big, right? Everyone's saying, do we have a soft landing? Do we not have a soft landing? I've run through a lot of scenarios. We've used some really good, intense technology, and we're finding that the basic things that you would expect tend to move the needle on the economy and certainly the stock market. One of those big things is this guy right here. Housing starts. This is the housing starts data, right? Are new houses being built? If new houses are being built, then the economy is growing to some degree, and we have growth, we have movement, we have progress. I thought it was pretty interesting. When we look at new housing starts right here, you can see, of course, this is 2008, 9, kind of 10, 11, and then it's pretty steady, right? We have a pretty steady incline. Obviously, COVID, 2020, we have this big dip, and it's really, housing starts have been kind of flat, right? We had a little run up since COVID, and a pretty good little run down. So really, the housing numbers haven't changed much. They've kind of been around this 2018, 19, 20 kind of zone for quite a while. So this just tells us, how many new houses are being built, right? These are, they've been permitted. They're starting to go with the build process. And I thought that this was interesting because this is one of the biggest economic indicators that we look at for the stock market, for the economy, for everything. It's pretty flat. We know that housing is super expensive. We know interest rates are super high. And we know that there's a housing shortage in America. So why do we have housing starts so low or so flat, right? So flat. And I think the answer is pretty easy, right? It's real expensive to build a house right now. Um, and that's another part of it. But if we look at this over here, this is, and shout out to my Koi fan homies, they're doing such a great job on this platform, so I love it. If we look over here, we see this is drawdown from the peak, right? Drawdown from the peak. So housing starts are still down 40% from where they were at the peak. Any guesses where the peak was? Oh, you can see it, 2006, right? 2006 was our peak housing starts number. We're basically only about halfway, a little more than halfway back to where we were on housing starts in 2006, right? When the whole housing market decided to just, really take a dive. So I look at that and I think, okay, housing is slowly recovering. There's hopefully a lot of demand. But where's our bottleneck, and what does this mean for the economy? So when we go over here and we look at a couple of different things, and I think, okay, we've got housing kind of doing what it's doing. This is another big one right here: non-farm private construction payroll. Where are we with employment for construction workers, right? Employment, pay, so on. I would be shocked if anybody out there could say, hey, I've gotten some contractors, they're doing a great job, they were really inexpensive, and they were happy to have the work, right? Nobody's saying that right now. They're saying, hey, they don't even want to come to me because it's not a big enough job and there's a lot of demand. They're through the roof expensive. And so when we look at these comparisons, right, we just looked at housing starts and we saw that we're only 40%, we're 60% back. We're still 40% below the peak of housing starts in 2006. When was our last payroll peak? Our peakiest peak? Again, 2005, 6, 7. And then, of course, we get this huge dip, right? 2008, 9, 10, 11. Well, we're back to the peak, right? I mean, we're 0.03% away from construction employment, construction pay peaks. So construction workers are making the massive amount of money that they've been making. You can see everything's just up, up, and up, right? We're kind of just bouncing around all-time highs, but housing is not recovering as quickly. So I just wonder, is one of these going to catch up to the other? Are we going to see that housing, being as expensive as it is, and people just saying, hey, I got a cheap mortgage, I'm sitting on a 3% mortgage, a 3.5% mortgage, a 2.5% mortgage, I'm just not going to move. And people are just going to sit and they're going to live in small places and do small things until prices start to come down a little bit. Is that going to happen? I don't know. I think so. But we know that construction on housing and housing itself is really kind of a big driver in the stock market, big driver in the economy. Right now it's real expensive to hire somebody, and it's even more expensive to buy a house. And so houses are not getting built as much as they should and as much as they could. And construction costs just continue to go up and up. So does that mean we have a soft landing? Does that mean that things are going to be okay? Or does that mean we're at kind of these peak levels where everyone's like, good grief, who can freaking afford any of this stuff? So I'm going to be watching construction numbers. I'm going to be watching employment numbers. I'm going to be watching housing numbers super closely. I just don't know how much else is going to matter there. We have a lot of personal consumer debt. And that kind of leads the pack a little bit, right? If debt gets too high, people start to default, things start to go crazy. But if jobs are good, people are paying their bills. It's just once jobs falter, once housing falters, the rest of the cards come crumbling down. I'm not doomsdaying anything. I'm not predicting any kind of recession. I'm just saying residential construction is through the roof, and that's kind of the only thing, right? And so is that enough to carry the whole economy? I don't know. We'll see. We know that there are problems in the housing market right now. There's problems in inflation. There's problems in all that. If people can't afford to buy a house, nobody's going to keep paying these high prices to have them built, right? the market speaks, and we're going to find ourselves in an interesting situation if nobody can afford, if builders can't afford to build houses because it's too expensive to hire workers, and houses are too expensive to buy at all. I don't know. It's going to be interesting. I do think that it's, a very telling chart here is the home builders. The home builders have had a great run. Where do they go from here? You look at Toll, you look at KB, you look at all these guys. I mean, they all look pretty much the same. It's just been big runs up. Can they carry on? Can they keep this run going? Are incentives enough? Do they own enough land that's valuable enough? I mean, these are going to be things that I'm going to be watching really, really closely, especially this week when we start seeing employment numbers. If we start to see a deterioration in the employment space, that's going to directly affect housing. That's directly going to affect the people that build these houses. So I think that's, if I could give you kind of two places to look this week, watch housing, watch employment. Are new houses being built? Is employment going up? Are people making enough money to do all this stuff in the first place? So that's what I'll be watching this week with employment numbers, with some housing numbers, and so on. Let's see where it goes. Good luck to everybody. Happy trading. We'll see you all soon.